Good evening, Kryptonians. This is Crypto Big Boss coming to you again on 29 May 2021. And there's a great article over here on the Motley Fool. Cryptocurrency crash. Is it time to buy the dip? You know, this is just one of the things they love to say. Buy the dip. Buy the dip. Okay. You know what? Before I start adding my commentary, let's just dig in. It's been a stress-filled month for cryptocurrency investors. Major sell-offs started after, here we go again. Tesla's CEO Elon Musk stated that the company would no longer accept Bitcoin and keep blaming this man. Okay, he's not going to accept it as payment for its vehicles, citing environmental concerns about the energy needed to mine tokens. News that China would take steps to discourage mining and prevent businesses in the country from adopting cryptocurrencies triggered additional sell-offs across the space. Is it me, or does everybody have the same freaking newspaper? They're all putting the same thing in their articles. It's Elon Musk's fault. And China's banning everything. That's why crypto's down. Oh, brother. With crypto prices recently seeing a substantial pullback, we put together a panel of 3 Motley Fool contributors and asked each member if now looks like the right time to buy. Read on for their takes on whether the recent crypto crash has presented a big buying opportunity. Now, here's what we're going to do. We're going to listen to what they have to say, and then I'm going to throw in my 2 cents. So let's get with it. What's prompting the big crypto swings again? Here we go. Keith Noonan. Elon Musk is clearly an influential figure and has some incredible successes to his name. And it's possible his involvement in the cryptocurrency space provides indicators about long-term adoption trends. However, in my opinion, the market-moving power of Musk's tweets reflects a lack of soundness in the crypto as an asset class. Mr. Noonan, I don't agree with you. I do not agree that Mr. Musk's tweets had that much to do with the crypto crash of 2021. Let's keep hearing what he's got to say. While most cryptocurrencies are decentralized in terms of what controls the individual coin, Musk's comments have apparently been enough to trigger big swings. Not for Bitcoin and overall crypto market. Not. Many coins are also more centralized than some investors think. As Musk himself noted, flooding in China's Xing region resulted in a dramatic reduction in Bitcoin's hash rate. As another example, roughly 100 accounts control the large majority of Dogecoin's total coin supply. There are already thousands of cryptocurrencies on the market, and new ones are entering the fray all the time. Many of these tokens are essentially indistinguishable in terms of utility, and there's not much to stop even the more specialized cryptocurrencies from being disrupted by new entrants in the space. Here's another issue. While the recent sell-offs are significant and surely painful for some investors, there are also not that big in the scheme of things. Ethereum's price has climbed 1,150% over the last year, while Dogecoin has exploded 13,310% across the same stretch. Bitcoin is still up roughly 300% over the last year and stands as the single best performing asset of the last decade. Now that is some good information. On the most basic level, value is subjective. If enough people believe in something and continue to attract new adherents to their way of thinking, that can drive the value of almost anything higher. However, when identifying potential investment candidates, I usually try to look for more objective metrics and trend indicators that paint a picture of why people will be likely to ascribe increasing value to an asset or equity. I struggle to find those characteristics in most cryptocurrencies, and dramatic volatility in the space stemming from the seemingly minor catalysts make me concerned that the overall asset class is still due for a much bigger pullback. Mr. Noonan, you've made some pretty good points. However, these metrics and trend indicators, okay, it's not about, in the end, it's not going to be about bar charts and pie charts. I'm sorry. It's just not. The dominating thing is going to be about adoption, in my opinion. It's not going to be about, you're not going to have to worry about the new entrants that are coming into the space. Best of breed will drive which cryptos will survive. And for those people out there making dummy cryptos and duplicate cryptos, they'll never, ever be able to get enough market share in the crypto space because there's already been somebody that was first to the punch. And those that are first to the punch, the Thetas of the world, the Chainlinks of the world, the Ethereums of the world, they're just not going to be, knocked off of their podium because they were first to market. Sorry, Mr. Noonan. Sorry, Mr. Noonan. Let's get over here to James Brumley and see what he has to say. Currencies can't trade like growth investments forever. I understand the logic. Cryptocurrencies like Bitcoin and Dogecoin have dished out incredible gains. Just when it looked like they couldn't go any higher, they went higher. Their recent sell-off seems out of the ordinary. The problem is nobody can actually explain why these sell-offs took place. Yeah, I can. You need to subscribe to Crypto Big Boss, Mr. Brumley. Okay? Computerized, market-driven trading on behalf of the institutional investors. That's what caused it, not Mr. Musk. They just happened without explanation. That's not true. Mr. Brumley, I want to invite you to subscribe to my channel, okay? So we can talk about it. I'll show it to you, Mr. Brumley. Okay? This unexplained volatility underscores the gaping philosophical flaws of crypto. Really? That is, although they're being touted as an alternative to fiat currency, they're being treated and traded like growth investments. It's a recipe for the market turning into a proverbial Wild West, which it has. Well, there's some truth to that. Sure, non-fiat currencies are appealing in an environment where government appears to be losing control of their piece of the global economy. I also recognize physical money is the past while secure digital money is the future. Oh, that's good. You recognize the digital money is the future. Keep going, Mr. Brumley. But at least the world's central banks are able to maintain some semblance of price stability for their respective currencies. Hey, guess what? They got stable coins, Mr. Brumley. You might not know about that yet. Nobody's attempting to hold the prices of crypto steady. Mr. Brumley, I just said they have stable coins, Mr. Brumley. Nobody's even in a position to do so. Mr. Brumley, I said they have stable coins, Mr. Brumley. That's why they're not reliable stores of value. Mr. Brumley! Have you heard about Bitcoin, which is the whole point of holding a particular currency? Mr. Brumley! Oh, goodness. What else you got to say, Mr. Brumley? Okay, well, you can buy the dip if you must. It's certainly never say you can't make money with them. Just recognize you're only speculating on how other people will arbitrarily feel about cryptocurrency. I'm not speculating, Mr. Brumley. We're beyond speculation. I hope that everybody that is hearing my voice right now hits the subscribe button, hit the like button, hit the dislike button. Just please subscribe. I want you to have this in your head. This is not about arbitrary Susie over here and James over here said that they like crypto and everybody just go buy crypto. This is not a beach volleyball game we're playing here. Okay, this is not just we're buying currency over here because we're having some kind of mood swing. That's not what this is. We're just following the herd. Everybody's talking about crypto, so let's just go buy some. Now, if that's how you are doing your investing, I would strongly, strongly, strongly suggest that you start doing your own research. Now, of course, we're not on YouTube supposed to say we're giving you financial investment advice, but I'm trying to help you see that this is sound research. Look, you're not buying these assets because of these other people. You're not just buying this because the crowd is buying it. I hope that's not why you're doing what you're doing. I hope you're buying Theta because it is going to be the future of how they broadcast media on YouTube potentially. I hope that you're buying Chainlink because it's the glue. It's going to allow data to flow from one blockchain to the other. I hope that you're buying crypto because you know what the blockchains are. You understand the blockchain is going to replace database technology. I hope that you're not buying crypto because Mr. Brumley is sitting up here telling you that, you know what, so buy the dip if you must. I certainly never say you can't make money with them. Just recognize you're only speculating on how people are arbitrarily feeling. That's bull, Mr. Brumley. This is real tech. These are real solutions. And guess what? These are real assets. I'm going to go on to Eric Volkman now. Hopefully, no safety in these numbers. Mr. Volkman, would you please save us? Can you, hope you don't get me as angry as Mr. Brumley, who doesn't realize Bitcoin is a store of value. Thank you. I don't feel cryptocurrencies are attractive at the current rates. No matter how many bargain hunters claim they're oversold. For the record, the crypto of all cryptos, Bitcoin, is down a queasy 34%. Man, I'm going to go look that up. Queasy. What is this, like the third or the fourth meaning of this? What does he mean by that? Okay. Others have also plummeted. Okay. It plummeted and is still up like 10, 20 freaking times its original value over the past year. That's some plummeting. Okay. Mr. Volkman, please redeem yourself. One very good reason to continue staying away is a concern that continues to dog cryptocurrency's safety and security. Take good old-fashioned hacking. While it's nearly impossible for a team of cyber pirates to raid the ever-lengthening distributed blockchain that undergirds any serious cryptocurrency, other facets of the system are vulnerable to attack. You know what? We might have a decent conversation with Mr. Volkman. Let's hear what he's got to say. Remember Mt. Gox? That was the Bitcoin exchange that hackers penetrated in 2014, stealing 850,000 Bitcoins. If the heist were to occur today, that pile would be worth a dizzying $33.5 billion. And at the time, Mr. Gox was the king of the world's Bitcoin exchanges. But that hack made it a future trivia question. Less than 4 years after its launch, Mt. Gox was a goner. While security has advanced since then, the crypto exchanges remain vulnerable. Last August, researchers at the Black Hat Security Conference found not one, not two, but three methods through which hackers could make effective attacks against such platforms. This, despite the billions of dollars and immense brain power and resources plowed into securing these sites. Another classic means of separating assets from their owners, phishing was responsible for the theft of roughly $200 million worth of crypto assets from various exchanges. That scam had been running for 2 years when it hit the headlines in the mid-2020. While any financial asset is vulnerable, I'm glad you said this, Mr. Volkman. That is basically what I was about to say. To a phishing attempt, the volatility and high dollar prices for certain cryptos make their holders particularly juicy targets. Phishing, for those unfamiliar, is the method by which a scammer impersonates a person in a position of authority to ask for sensitive information from the victim. Once obtained, that information is used to access valuable property for theft. Another security concern is the decentralized nature of cryptocurrencies. This is the key selling point for such assets as governments, central banks, and other important policymakers that can't tinker with them for political or economic advancement. But the flip side of that is that they are subject to worrying with regulation. The U.S. banking system, for the instance, has a clutch on regulatory agencies watching and protecting it from the federal level on down. To name one, traditional banking accounts held by an individual are automatically insured for up to $250,000 by the Federal Insurance Deposit Corporation, FDIC. There's no U.S. public agency that insures $250,000 worth of Bitcoin. So no, I don't think cryptos are a buy on weakness right now. Okay? I'm not convinced they're a buy, period. Mr. Volkman, let me have a few moments. You know, usually before I barbecue, what I like to do is I like to go outside and I like to go get. I got one of those chainsaws. You know, everybody that knows about barbecue knows that you're not serious about barbecue unless you got a chainsaw. You see, you can go and get couple little sticks and put them out there, and you can get some charcoal, but you don't have no barbecue until you get a couple little sticks and the charcoal. You just have the charcoal, maybe just get it started. But if you want some real barbecue, you gotta go out here and get yourself a chainsaw, or you gotta get some wood that is dry and ready for the barbecue. So let's get some. Let's go ahead and get us a couple of cuts of wood here, because Mr. Volkman, I don't know how to say this, but we fixing to barbecue. What you got to say? Because Mr. Volkman, I respectfully disagree with the majority of what you had to say. Personally, I think that when I look at these three individuals over here at the Motley Fool, Mr. Noonan, Mr. Brumley, and now Mr. Volkman, I was really hoping that you would help me out here. All you have done is basically outline the security deficiencies of every single financial institution in the whole world. Hey man, anybody with a freaking ski mask can go up to the freaking bank and freaking rob it. Okay? And these hackers that are out here, they can get into any freaking system. Okay? They were hacking banks long before there was crypto. And when you start talking about phishing attempts and all this bull crap, every single asset class, every single bank, anything can be freaking phished, Mr. Volkman. Anything. You talking about phishing? That is your argument for not investing in this asset class? Man, somebody can phish you for your freaking your E-Trade account. They could get your credentials for your bank account over there at Ameritrade or over anywhere. Your TD Ameritrade, your E-Trade account, your freaking ramen noodle account, your freaking Bank of America account. Mr. Volkman, you're sitting up here about to miss out on the greatest asset created in the history of mankind because you're scared. You're scared, Mr. Volkman. What are you afraid of? You know, you're like the guy when they were over there panning for gold out in the wild, wild west. You're the guy that was scared to go because there was bank robbers. There was bank robbers out there in the west. And if you find some gold, they're going to kill you. Mr. Volkman. You can't be scared, Mr. Volkman. You can't be afraid to take your money. You're the kind of guy, Mr. Volkman, that goes out there and takes your money and sticks it in a mattress because you're scared the bank can't insure you. Okay? You got all your money in a mattress, and then all of a sudden something bad happens, God forbid, and your house is on fire and burns all the damn money up. Mr. Volkman. It's going to be all right. Go get you some Bitcoin. Mr. Volkman, don't listen to Mr. Brumley. Okay? Bitcoin is a store of value. Okay? And all these kinks that they have with the security, just like they had kinks with the security with the bank, they're going to work out the security, Mr. Volkman. Okay? They're going to secure it. You got the Winklevoss twins, they're out there. They got teams of people working this. There's $1.5 trillion in this freaking asset class of cryptos. Do you really think that all these Fortune 500 companies and institutional investors are going to sit around and let some hacker come in and take a $1.5 trillion, Mr. Volkman? Okay, guess what? Usually after a good barbecue, you probably want to go and sit down and have yourself a nice glass of rum. Maybe a little ice cream. Cool off a little bit. Because guys like Mr. Volkman and freaking Mr. Brumley and freaking Keith Noonan, y'all are pissing me off. With that, if you've enjoyed this video and found it informative, throw up the likes, throw up the shares. If y'all happen to see Mr. Brumley, tell him to get some Bitcoin. You see Mr. Noonan out there, tell him it's okay, okay? Ethereum's gonna do just fine. The sell-offs were triggered by computerized trading. Tell him to get to subscribe to Crypto Big Boss if you see Mr. Noonan. And as for you, Mr. Volkman, good luck putting all your money in a mattress. This is Crypto Big Boss and I'm out.